Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Qs. Basically, this is the ETF that represents the NASDAQ market. And as I do each and every week, I've left my lines on the chart so you can see just how well the forecast worked out and how technical analysis is so valuable with regard to forecasting the market. And if you followed my report from last week, you'll know that early on I said we would most likely rally, hence the reason why I drew this line in the upward direction. And I said we would most likely see that early in the week or Monday on Tuesday. And look at that, just like clockwork. Monday we were up, Tuesday we were up, and then we started to head right back down with the end of this line being my target. So again, the forecast was 100% accurate. We hit the targets. The market moved right on my pivot points. And so while that might seem very impressive, let me tell you what that means for next week. There's a couple of signs here that we have to pay very close attention to. First of which is this little candle known as a hammer pattern, or very close to a hammer pattern. A hammer pattern is when the shadow under the candle is 2 to 2.5 times longer than the length of the body of the candle, which is the area that's shaded green here. That is usually a bullish sign. So when we combine that with the lift in volume here, you see this green volume bar had gone up on Friday. That tells us that the buyers are moving back in, and it looks as though that we could see an up week next week. Now, with that in mind, understand that there's also a resistance point up here right around 183 for the Qs. I'm going to leave that in place and actually put that as my target price for next week. So I could even extend that all the way out so you could see exactly where that winds up on the price scale to the right. And then I'm going to draw my forecast line, which basically is going to be a diagonal line that I'm going to draw right from this candle right here. So my line is going to look just like that, and what I'm trying to do is more or less duplicate what we saw in the angles back here. When the markets went up, it tends to go up in a little bit more than a 45-degree angle, so I'm going to keep that in place. Now, as bullish as I am for next week, again, this is all short-term forecasting, I do think it's very important that you keep your stop somewhere below these lows. So in other words, if you take a long position in any of the NASDAQ stocks or tech stocks, it's always a good idea to put some type of protective stop under the market in the event that we're wrong in our forecast. You don't want to subject yourself to any kind of a major loss here. You want to keep those losses very small. Now, let's go to diamonds. This is the ETF that represents the Dow Jones Industrial Average, and you'll see here that my forecast was that we would most likely see lower prices with the end of this line here being my target. And lo and behold, on Wednesday we hit that, and then we bounced. Now this is going to be a little bit different than what we just saw in the Qs, because there's a lot of news around in the tech sector right now, and we can most likely see more volatility in the NASDAQ market than we do the Dow. But this week we had news coming out of Turkey, good news out of China, and the markets were being affected by that news. So the volatility is there, but we have to make sure that we're positioning ourselves correctly so that we're not, again, subjecting ourselves to unnecessary risk. What I think we can see, and I'm just going to clean this line up here. I'm going to erase this line so we hit that target. We have that line from last week as well. This horizontal line is a gap fill point. And if you've been following along with my gap trading strategies, you'll know that 80% of the time gaps fill. So we did fill this gap. But the other part of the equation is once a gap fills, there's an 80% chance that the market will reverse from that point. So when we combine all of the gaps, let me zoom in just a little bit here for you so you can see this. So we have a gap above the market that was filled, but we have a gap below the market right here that is now open. So I'm going to erase this line right here and tell you what we could possibly see for next week. With the Qs being more bullish than bearish at this particular point, I'm going to say that early on the Dow is going to rally up with the rest of the tech sector. Not that far, but I think we could rally up, mainly because we see a drop in volume on that green candle, which tells us for the Dow, the buyers are a little less motivated on Friday than they were on Thursday. So I think we can move up a little bit, and then I think we're going to come right back down to fill this gap right here, right there. I'm going to leave that in place with my gap fill target being a new support level. Remember what I said? After gaps fill, there's an 80% chance that it could reverse from that point. So if this gap fills, it could very well bounce, and that makes this line the support level. Okay, let me erase this. We are done with that forecast. It came out 100% accurate on that one. I'm going to erase this so we don't confuse the lines and leave that as support, gap fill support, with my forecast going up early in the week and coming back later in the week. Okay, so that's for the Dow. Now the Russell 2000, being a more broad-based index, this is the ETF that monitors those 2,000 stocks. I said that we would most likely move lower on the Russell, and we did that. You can see on Wednesday, came very close to this target, and then we bounced off of that, this now being our new support level. This right here is a resistance point that I think we could break out of. So I'm going to put that as a resistance, but I'm going to forecast that we are going to break out of that. And I think we could see just like this. We'll break out of that short-term resistance, and then we'll probably knock our heads up against the resistance right here. So I'm going to leave this in place and even extend that out just a little bit. So that's what I think we're going to see for next week. Keep an eye on this. Hopefully you're following along each and every week with my reports so you can see how accurate this is. I'm not always 100% right. Believe me, there are times when one market might move against the other, but the averages are well into the high 80s and close to the 90s, so with regard to percentage of accuracy. So this is a great tool to be using to forecast, and I encourage everyone to at least learn a little bit about technical analysis so you could use it more as a risk management tool than a forecasting tool. All right, let's move on. I'm going to talk about the VIX, because the VIX is a volatility index that leads the S&P. And what I said last week is that we would most likely rally up. This was a 2-week forecast that I put out, and I extended this line, and I most definitely said that we would rally above this resistance, and look at that. Not only did we hit my target, but we went above my target and then came back down. So let's erase that line from last week and draw what I think we can see for next week. Now keep in mind that the VIX is inversely related to the S&P. So I think the VIX could move down to fill this gap right here. See that? There's an open gap. The VIX fills its gaps. Unlike stocks, the VIX fills the gaps 100% of the time. So I think the VIX will move lower, and then we'll have to see whether or not it bounces. I'm not going to draw that line yet until this gap fills. Now again, keeping that in mind that the VIX is inversely related, if the VIX is expected to go lower, what does that say for the S&P? Well, the S&P 500 represented in the spiders here will show you. I think that the S&P can actually start moving higher. You see my zigzag from last week? I was getting a little cocky last week, and I said, well, we're probably going to move down, then we're going to move up, then we're going to fill that gap and maybe pull back down. Well, that's pretty much what happened. Monday and Tuesday, we moved lower here. We rallied back up to this part right here, but in between, we came very close to filling this target. So to clean this up for you and redraw the lines, let me show you now. This gap is filled, but because the VIX is still looking slightly bearish, I think that the S&P is going to move up a little bit next week before it starts pulling back, just like that, and possibly all the way down to fill this gap. But I'm marking this not only as an eventual target, but as our new support level for the S&P. All eyes next week are going to be laying on the VIX. That is our leading indicator. It's something I keep on my watch list and I look at almost every day, sometimes several times during the day, and I encourage you to do the same. Put it on your watch list. It's ticker symbol VIX. For some trading platforms, it's $VIX. But find out what that is, put it on your watch list, and use that as a leading indicator. Now, if you'd like to learn more about what we do here at The Market Guys, feel free to go to themarketguys.com. Next Monday, which is the 20th of August, right down here, we're having an open house. Click on that registration link right there, and it will bring you to the registration page where you can put your name and save your seat. All you have to do is fill in the blanks and hit register, and your seat is saved. You can ask me questions. I'll analyze stocks. I will be talking this Monday about the stochastics oscillator in great detail, so you can use that as a lesson for learning how to use the indicators and oscillators. And we're going to have an action-packed hour. So hopefully you could join us. Feel free to invite your friends, your family, your neighbors, whatever. It's open to the public. It's free, and I think you'll get a lot out of it. Enjoy the rest of the weekend. We'll talk to you on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.